Good evening, folks. Good evening. Good evening. So, just going to talk through my trade from yesterday. So, this trade, I got involved in this trade yesterday after 6 a.m., just around 6 a.m., and I basically closed out of the trade earlier on today. And as you can see from the risk reward tool on the screen, this is where I got involved and this is where I closed. So I'm just kind of going to talk through my reason for entry, of course, and then why I got out and things like that. So my trade was essentially based off of the monthly time frame and my sort of weekly outlook that I posted on Sunday, and I was potentially trying to replicate like what we can see here. You know, we have a strong push up, we have a pause in the market, and then we have continuation. So we have a strong push up, we have a pause in the market, continuation. The fact that we're overall bullish in the market, the fact that the last 2 weeks of last month created this lower wick, which price was pushing up. So the fact that price is already pushing up, is there a possibility that when this month opens, we just continue that push? So there's like, if you think about price pushing up, pulling back and continuing, there is no real reason for this monthly candle to start pulling back if we've already done the pullback and we're pushing. Do you know? So that's the sort of thought process behind what I was expecting. Now, this monthly candle literally has no wick on it. You know, I didn't know that it wasn't going to create one, or if price wasn't going to push down or anything, but sort of like replication of what we can see in the market. You know, like look at exactly what's happened here. We've just opened and shot to the upside. So the fact that we have closed above resistance, we have then pushed all the way down and rejected that resistance and closed back above. I'm just seeing this candle as the candle is going to continue. And my target is basically trying to fill the wick of April's monthly candle. Now, if I just bring on my sort of drawn tools here, it's a bit messy. However, what comes before this is this monthly zone, this support zone. And obviously we can see here that we have had rejection of this zone, rejection of this zone, and rejection of this zone. So what I want price to do is to remain in here. But if I just go down to the 4-hour, and I'll kind of just talk through my entry. So as you can see, we had a bearish open. We had a bullish 4-hour from 2 to 6, which is a nice looking candle for upside because we have pulled into a previous level of support. We've broken through and we have failed to close below, and we closed back above, and then we started to continue. So my entry was based on the 1-hour. Solid push down, failure to continue, respect the support, close back above resistance, close back above 4-hour support. So to me, as this candle started to push up, I got involved in a buy, and what I was looking for was I was looking to see if I could get in a position early in the month or early in the week and see if this is going to be the position that I can hold for the week. And then as each session comes throughout the week, I could add positions, you know, like trade within the overall big idea. So that was the thought process behind the entry, and we just took off. You know, I didn't know we were going to move so much so quickly. And this trade, I closed this trade for like plus 4.68%. Now, because I managed the trade as it was pushing, I didn't return or close out for that amount of percent on my account. I think it was about 2.5% gain in terms of monetary value. However, the overall trade hit a risk reward of 4.68%. So if I hadn't have managed the position, you know, I would have returned a lot more. However, That's not the issue, or not an issue, I should say. And where I sort of took profits as price was going was, as price got to the 1 hour sort of triangle here, this new target, pull back in the previous structure, we're leaving it. As we got to here, this was about a 1-to-1 risk reward. So what I done was I took off 0.5%, because that's typically how I trade. You know, if I'm not getting the full targets, excuse me, I'm usually closing out at like 0.5%. And that just fits my management style in terms of my data collected. I have a very high win rate of achieving 0.5 when I enter a trade, so it makes sense for me to sort of take action there, you know. Now you might say, well, you're holding a trade which is like 500 pips. Why would you take profit there? Do you know? Because there's nothing there, like there was no real indication the price is going to push so much, right? So I wanted to secure a piece, and I was going to let the rest run. And then on, let me see, where are we? Yeah, so yesterday, just prior to the market close yesterday, if we can see here, price is trading around this area. So at around market close, we had sort of formed a resistance, and this candle opened, and it was the first hour of the new day, the new daily candle. I just basically, before the candle closed, the daily candle, I just secured another piece. And the reason I done that was because I believe I was in a trade last week or the week before maybe, and it was a trade I was holding overnight, and with the open of the new day, there was a bit of volatility and price actually dropped significantly. Now, I just wanted to secure an extra little piece because to me it meant that, well, whatever the remainder does, I'm happy with letting price go, or do its thing, come back as far as it wants, because the last thing I wanted to do was, you know, not secure anything. Price, you know, shoots on 200 pips, secure a small piece, and then it retraces like, I don't know, 100, 150 pips, and then it's kind of like, well, there was an opportunity for you to actually secure more. And when you think of sort of goals for the month, and sort of, I want to achieve this, or I want to have this sort of income, or return this amount, you know, over the month, sort of things like that, I was able to do that with this trade. So or this sort of piece, closing out a piece of this, it allowed me to, you know, get a step closer to that. So I don't want to put myself in positions where I'm holding so much like pips and profit and not secure anything, you know. Just as much as this shot up, it could have come back down just as quick. However, we are bullish in the market, and we can kind of see here that we are just rallying strong. You know, you might say, well, oh, price is bullish, you're bound to get some sort of pullback, but until candles or until structure tells you otherwise, then there's no real reason to look for that. But this trade, I took a portion of the trade off at 1-to-1. Then before the daily close, I took a piece off, and then today, during London session, just after London session, I decided to just close the remainder of the position. And if we look at it on the 4 hour, that's where I closed the position. And the reason for me closing the position was I was just comfortable with what the market gave me and what was there. And I said to myself, do you know what? If the idea plays out, brilliant. You know, your analysis is spot on. However, I'm just happy with what it gave me. So I'm content on closing. And what I can do is any sort of pullbacks in, I can then look to re-enter, just as well as what I would be doing during the day anyway, and just not holding this position. Now, I did have a couple of discussions today, and it was trailing stance below structure and things like this. But after chats about monetary value and goals and what you're happy with, and sort of getting into a good position at the start of the month, why not close? Do you know? I'm not here to hold home running trades. This was just an idea which actually played out really well. You know, it's very rare that I hold positions this long, but sort of from a weekly outlook, based on how structure was forming on the 4 hour, it made sense to maybe, if we respect this, to see a continuation. And if that is at the start of the week, then that means that I can get in a good position for the start of the week and see where price takes me. And just after I closed, like I'd say maybe about an hour, price has then extended again. So that's good to see from a sort of analysis perspective, because one thing I was looking at today, and just to kind of elaborate or move on from talking about this trade, I actually took another trade this morning during London session, which was a trade which actually worked out. However, I closed the position at break even, and this was the position here. If I just draw this on, this is what I was analyzing, and this is what I was targeting. So the previous two candles leading into London session, pre-London, was bullish, so I'm looking for buys. 30-minute chart price. This is Asian low, Asian high. However, this is the most recent support and resistance, which makes sense to me looking at the 30-minute time frame. So as price pushed down, price actually pushed into this previous resistance zone. Now this resistance zone is made up from the 4-hour time frame. Looking left, because what I'm doing is, when we're pushing into this zone, or like as we're pushing bullish, I'm saying to myself, well, what is left? Like, what is most recent to the left that could potentially be of an issue or be of an area where price might be attracted to? And as you can see, we reacted here. We had a small pause before we pushed, and we closed above. So when I came to the charts this morning, I was saying to myself, well, do you know what? I want price to reside above this, because if we don't reside above this and we actually close below, as price starts to push up again, this resistance can then hold as a potential resistance again. There's a possibility that if we close below, that this will hold and we'll test the bottom end of this range, which is the sort of 4-hour zone I've got. So if we close back below here, I believe that we might then, if we fail to break back out again to the upside, we'll remain in this. And if I'm in a position, this is all being based off of being in the position from down here yesterday. If I've already allowed price to push all the way up to here, which is 265 pips, do I really want to allow price to come all the way back down to here? And just say, which is 130 pips, so I'm actually just giving 130 pips back to the market. And just say price comes down to here and it doesn't hold and we break back down. If we break back down, there's a higher chance that we'll continue down then. So again, I said to myself, I want the price to reside above here. So the fact that when we looked at the charts this morning, price had pulled down to a previous level of structure and formed a support on the 1 hour, and on the 30-minute we can see here it offered an opportunity to buy. Now I closed this position at a break even when price pushed up and rejected this hourly support and pulled down. I just closed it. Reason being, I had planned this trade this morning, but I was sort of, I believe I didn't put myself in the best position in the market in enter. Now there is every chance that price pushes up, reacts here and pushes down, because essentially what we have done is we have broken below and closed below structure. So if we do that, this could be an early indication of, if we form a lower resistance here, and start to push down, this could be the potential start of the downside move, or maybe the pullback in the higher time frame perspective, because we have been pushing so hard for the past couple of weeks. Excuse me. So the fact that we were below this, and if I drop to the 15 minutes, we can see that we actually did form a lower resistance. Now, that's only evident on the 15-minute time frame, and the 15-minute time frame is a weak confirmation. So just because we have 15-minute lower resistance doesn't mean we're going to continue down. However, when I looked at this, and even from an hourly perspective, it makes more sense to be above this level, because if we fail to break back above after closing below, there is a good chance that price will then continue down. And looking at this trade, there was an option to manage risk. I could have said to myself, if we start breaking this low, or if we start breaking below the support, I can close the position and I will lose less than I set out to lose, which is a win. Okay, even if we start to leave this zone, the 4-hour zone, again, I could close here and still lose less than I set out to lose. Again, another win. So you might be thinking, well, why did you close early then? So I said to myself initially that this 1-hour resistance, which is here, let me just change this to 1-hour resistance. I said to myself, if we close back above this, I will buy, right? And the reason I wanted to close above this is because we were actually reacting from it. We can see that we pushed down, we pushed up, reacted off this zone, closed below, and then this candle formed a support, but it didn't close above. So when it closed below and price started to break the high, I entered. So I actually took the position, not to say that this is a bad entry, because it's actually a very good entry, but I sort of went against what I initially said, and I was sort of influenced on that decision as well, but emotionally. I think a bit of emotion came in and played its part in me entering this trade. And sort of when I'm thinking about sort of like my checklist or my notes or questions, I'm asking myself, like, one of my questions is, is this trade being taken based on emotion? Because essentially we shouldn't be trading with emotion. We should just be trading by our rules, by our plan, textbook, no emotions, like a robot. But so I sort of traded with some emotion in there. I also went against what I said I wanted to see. And then I understood that where we actually are in the market, this isn't the best position to enter long. The reason being is, if I enter long here, price comes up, rejects here, and starts to go down, because we have broken below structure. So the best area to enter is above this support. And looking at the lower time frames, as you can see, as soon as we close above this support, we get a strong push. And the reason we get that strong push is because this candle is a clean candle. So on the way down, we can expect to see the same on the way up. And of course, entering here, this isn't a clean candle, this isn't clean. We can see we've reacted from here. We're reacting off this support, we're buying into support, and it is the riskier option. So based on those things being the riskier option, emotion influencing my decision, what else was there? Oh yeah, entering against what I said I wanted to see. And the fact that at this time of entering, I was actually still in my position from yesterday. So did I really need to be in this position? No. And when I think about high probability setups and putting myself in the best possible position in the market, was I doing that with this trade? Not really. And you don't need to trade every day. You only need a couple of trades a month, really. So the fact that we're, you know, a week into the month, I'm happy to just come out of this trade at break even. And if it plays out, it plays out. There's a lesson learned today, do you know? So that was that. That trade did go on to take profit, but I closed out of that for a break even. And then as price started to break down here, this is where I then closed my long position, just as we sort of formed this support, this sort of resistance here. I just looked at the value. I said to myself, I'm happy with that, and that puts me in a good position. And then I can look to just trade the remainder of the week if need be, or see what options I have. Does it make sense to be in those positions, and go from there? And then, or possibly just even look into next week. But I sort of had this arrow going up here, and we were having a discussion this morning about, well, what if we actually close above Asian range and we push to the upside? What is there that's left that might be an issue? And we have a clean move down, but this move down was news related, so it doesn't really tell a clear picture, because although it's smashed through these sort of wicks, it doesn't necessarily mean that on the way up we're gonna easily just breeze past that. And just looking at the 1 hour and the 30 minutes specifically, there is a 30-minute support here. So on the way up, this would have been an area I would have been paying attention to potentially take profits at, if we didn't have such a deep pullback pre-London. But yeah, and it seems like that's sort of coming into play now, in a sense that we've closed above, and maybe if we can respect this, we can continue. But you know, overall the plan was to get to the monthly, fill the wick of April's monthly candle. To be honest, I didn't really expect that to come in sort of like 1 week's push so far. But before we even get there, there is this monthly support. So I would expect some form of reaction there. And of course, my sort of higher time frame idea would be if we can have weeklies and dailies closing above 167,465, which is this daily or this monthly support, if we can hold support above that level, then I would be looking to push up to test the opposite end of the monthly range. But of course, on the way up, there is going to be areas in here on the lower time frames that we will have to pay attention to. So that's my sort of trade breakdown from yesterday and today. Today's trade was a break even, and yesterday's trade close today was about 4.6%, which puts me in a really good position for the start of the month. So appreciate you taking the time to sitting through this, as it is a 23-minute video. But cheers, thank you.